Okay, lads. So as promised, we'll have a look at this 2018 mock one. It's the one we did in class today. Um, the one with the goods sold on credit as on a seller term basis in it, and a few other little things. So, um, all right. So if we start off and we'll deal with this is what I'm saying to you. You have a glance through the question and see if there's anything new. So, what became new in this one was in December, Brooks sold goods on credit on a seller term basis. These goods had a retail value of um, €9,000, which includes a markup on cost of 25%. So I'm telling you that if we sell goods on a seller term basis, the sale never happened. So debtors need to go down by the amount we sold the goods for, which is €9,000, and stock needs to go back up because the stock has left our warehouse. We haven't counted it. It should be in our warehouse, so it goes back up by the cost price of the stock, which I have a feeling. I'm going to check the answer here because I'll show you how to do it in a second. I think it's 7,200 is what we worked it out to be before. So um, that's just the thing we know. So I will be changing this stock and these debtors. So stock is going. Let me just work out what that 9,000 is at cost price. So it's to find it. It's 9,000 divided by 125 and multiplied by 100. So 7,200. So the stock is going to go up by 7,200. The closing stock. So 32.5 plus the 7,200. Um, column 32.5 plus 7.2. Okay, that's that. And the debtors goes down at the end of the year by the 9,000 because you sell goods at their selling price, not at their cost price. So that's the one I got wrong earlier that Sam corrected me on um, while looking at the answer. Okay, so that's that dealt with now. You don't have to worry about any of the rest of it now. But again, as I said to you, you have seen that before. It's really important that you note that you see that in tabular statements and you see it in sole traders all the time. So it's something that you should have been able to go, well, what do we do? That you would have known that you when you're dealing with it, that you change stock, sales, and debtors. Okay, so in this we also have to work out sales, so therefore you're not going to change stock and you're not going to change sales. You're only going to change stock and debtors. All right, so that once that's done, you can go back into the question as normal. Now we worked out pretty sure we worked out the goodwill to be 33,000, but I will do all of that. Just going to get my separate again. So goodwill, we paid anyway. We purchased 350, the business for 350, so we put that in our capital, and then we'll work out what the goodwill is. So the goodwill, if you remember, is the difference between what you pay for the business uh, and what it's worth. So it's 350,000 less its value. So that's what you paid for it. I'll just bring that down. So you paid 350, and its value is uh, its assets minus its liabilities from the top. So that's 250 plus 45,000. These are all assets. Plus 38.2. Plus insurance prepaid is an asset of 1,200. Minus the 15,000. Minus 2,400. Okay. So we take them away from each other, and you get 33,000 as your goodwill. Okay. Now, I would just for cheap marks, I would also get in the rest of my assets and liabilities from the bottom. So the stock 32.5 I've got in, debtors I've got in, creditors is a liability. So that is 29.2. Cash 350 I'll put in my assets. I've got my light and heat due 325 liability. Sorry, where did I get that from? Jesus. Apologies, I'm the cash. I've taken the wrong. I am right, sorry. Light and heat due is 325. I also had a stock of heating oil 550. Then it tells us the delivery van is an estimated value of 35,000. So delivery vans is a fixed asset. Its value is 35,000. I'm going to put it in there. Now, it's telling you that's 35,000 its value because it's going to suggest there's depreciation somewhere along the line, and I'll come back to that in a while. Okay. So once you've that done, you've got all your stuff from the top to work out your goodwill in. You've put your capital in, and you've put in all your assets and liabilities from the bottom of the question. You're sort of good to go then with the rest of it. So we go back up to the top and we find our premises is 250. Okay, so premises is 250. Now you know in this that you're going to add in another premises that you'll buy. You always borrow money to buy another premises. So we borrowed 240, part of which was used to purchase an adjoining premises costing 190. So that is what's that, 440? Okay, that's that dealt with. Stock is opening stock 45,000, and I think while I'm at it, I'll put in my closing stock, which will be this 39.7. So that's that dealt with. The stocks now, debtors. Now this is our tough working here. So this is where we use to work out our sales, right? So sales is made up of credit sales and cash sales. If you remember, credit sales, we're looking at our debtors. So we always take the starting figure from the middle here. So the money we've received from debtors, which is 53,000. So during the year, we got 53,000 for debtors, of which 38,200 was from last year. So we take that away, and then you still have debtors at the end of the year, which is this number here, 22,600. Okay, so that'll give you a credit sales of 37,400. Okay, so our second one then is our cash sales. So to find our cash sales, you can do it as a T account if you want, but I'm telling you the only thing on the left hand side of the T account can be the sales. So to find what the sales is, you add up all of your cash payments, and all of your cash payments are here: 91,000 plus 74,000 plus 43.5. And the other two things you can add in are any cash drawings. So you have cash drawings of 10,000 for the year. And then the last thing you can add in is your cash balance at the end of the year of 350. And if you do all of those, if there was a cash balance at the start of the year, you'd have to take it away. It's unlikely you'll ever buy a business that actually has cash at the start of the year. But if you do, and there has been in some questions, you take it away. But that gives you your cash sales of 218,850. So you add the two of those together, and that gives you your total sales of 256,250. Okay, I'm going to do my purchases in the same way. I'll skip down to the purchases because that's the order I did them earlier today. Purchases done the same way. You've got credit and cash. So credit purchases looks at creditors in the same process that we did with sales, right? So go find your payments to creditors to start off with 66.5. Take away from that your creditors from the start of the year, um, which is 15,000, and add on your creditors at the end of the year, which is 29.2. Which is 80,700. Cash purchases you don't have to work so hard at. It's just given to you here. So cash purchase 74,000. So you just add those two together. And then importantly, I'm after, sorry about this, this is going to add up into a new bloody, I pressed the wrong button there. Importantly, there are drawings of stock that you have to take away. So you've stock drawings and it's 85 quid a week. Which is 4420. So we take that away, you get 150, 280. So at that point, I would put that in, and I would also then open up my drawings working. So just while I'm here, I might as well work out my cost of sales and my gross profit. Okay, now I would open up my drawings working. I've got my stock drawings, which is 4420, and my cash drawings I've already seen was 10,000. I would have them. Okay, so that's your debtors from here done, and your creditors. I wouldn't normally skip the 3 months insurance prepaid. I just did for the sake of teaching earlier on today. Anyway, the insurance prepaid is designed to do our insurance working. Our insurance, again, start off with your full payment for the year, which is 3,900, and that's 12 months. Okay, you add on your prepaid at the start of the year. Your prepaid at the start of the year is 1,200. Now that was for 3 months. If you have 3 months prepaid at the start of the year, you have to have 3 months prepaid at the end of the year. Okay, so you take that 3,900 to work out your 312s. Okay, and that's 975. Sorry. Okay, so really importantly, as I said earlier, to put that 975 in as a current assets. That's the one that's probably the easiest one to leave out. And then you just you the 4125 goes into your expenses. Now you should obviously have checked if quite important that you check that there's drawings, which I didn't do, but anyway, I normally have a read of what the drawings are. It's normally light and heat and interest payable and college fees. It is what it is. So that's that done. I've done my insurance, I've done my trade creditors. The last one there you'll see is my wages due. For my wages due, I'm just going to take that away from my general expenses. So if it's due, you take it away at the start of the year. So you've got, what's that, 43.5 minus 2.4 is 41.1. Okay, so that's that done. So we've everything from the top done. We've most of our tricky workings done. A couple to go, but we should fly through the rest of it. Lodgements, that's dealt with. That's done as a contra entry, so nothing done there. Purchases is done. General expenses is done. Delivery vans, right? Delivery vans 43,000. Now, if they cost 43,000, we didn't buy or sell any, and they're valued at 35,000. That means there's a depreciation of 8,000. So that goes there. But remember, depreciation for a year is an expense. So that 8,000 also has to go in your trading profit loss account. That's that one done. Creditor 66.5 I've done. Insurance I've done. College fees is next. And we know college fees is an expense in general. However, there's pretty much always drawings on it. So the college fees is 5,000, but if we go down to the bottom, it says half of the college fees was for his own son, who was an employee in the business. That means it's for his work. The other half is for his daughter. That implies she wasn't an employee of the business. So 2,500 of it is an expense, and 2,500 of it is drawings. Okay. Office equipment. So office equipment costs 25,000. That's an asset. I don't think there was any depreciation on it, but we'll see later on. Standing order for charitable donation. We know that's an expense. That's called a covenant. And that is 5,000. That's roughly where I got to today. So we've got our light and heat and our loan interest working and a few other little bits and pieces to tidy up. So light and heat, 2,500. So I'm going to have to do working on that. Not only because I know there's light and heat due and I know there's stock of oil. So the at the end of the year, you have a light and heat due of 325, which you would add on. On top of that, we also have a stock of oil, which you always take away stocks of oil at the end of the year, or stocks of anything. So the stock of oil at the end was 550, so that gets taken away, and that gives you the light and heat used. Okay, 2275. Now, if there's no drawings, that's the number that goes in. But there's pretty much always drawings on light and heat used. So it tells us 20% of it is for the private section of the business. So that's 20% of 2275. So that is Jesus, where's it gone? I'm wrong there. So it was 2,600 to start off with. So 2,375 then, isn't it? Yeah, so 475 gets taken away and 475 goes into your drawings. Okay, so your answer then is 1,900 for your expense. Okay, so into our expenses, light and heat, 1,900. And the last one ends our loan interest, which I'll always come back to later on. That's used to work out our loan interest due. So bank lodgements, debtors is done, cash is done, family inheritance 30,000. So you've inherited 30,000 and you've lodged it in the business bank account. That is capital introduced. So that lodgement normally after debtors and cash, no matter, it could be dividends, it could be anything. It's pretty much always capital introduced. Uh, he took stock to the value of 85, dealt with that. He took cash 10,000, dealt with that. Um, on the first of the 11th, he borrowed 240, part of which was used to join premises costing 290. So the loan is 240 in total. I'm about to change this number of 240 here, but I'm putting it in there for the time being. He's going to pay it back over 12 years in equal installments, the first due the end of next year, towards the end of next year. Okay, so he's paying back 240,000 in 12s. Uh, so in 1 year, he is going to pay back one loan installment. So to do that, he's going to take the 240,000 and he'll divide it by 12, and it's 20,000. That means he doesn't owe 240,000 after 1 year. He owes 220,000 to balance. So 240 plus or 220 plus the 20 is 240. So 20 within 1 year, 220 after 1 year. That's how we deal with that. The loan interest itself, then, the rate of interest is 8% per annum. He got the loan on the first of the first. So the loan interest is 8% of the full amount, 240. Got the loan on the first of the 11th, so he has it for 2 months. So 8% of 240 by 2/12, which is 3,200. Now, I'll come back to the drawings in a second, but the loan interest due is 3,200 because we always have loan interest due after we have loan interest. You take away whatever we paid, so it's 2,800, and that gives you 400 for the loan interest due. And before I even work out the drawings, I'm going to put that 400 in here because that's another thing I would often forget about. Okay, so the drawings then, it tells us that it is 25% of interest payable. So the interest payable is 3,200. So 25% of that is 800. So the loan expense is 2,400. That 800 is your loan interest there. So the 2,400 is your expense. Okay, the 800 into your drawings working. So that's that all done. I think we've done the drawings. 20% light heat, 25% of interest payable and college fees. That's all done there. And then we've put everything in at the bottom. So we've 2 jobs to do. Add up your drawings. That's 108, 195, 18, 195. Have I gone wrong with a zero? Most of it couldn't be 108,000. 18,195. Remember, that's a minus. Okay, and the last thing then is to work out how much money we have in the bank. Okay, so to do that, you make a T account. I'll come down here to do it. So what I'm going to do is, it's hard actually to bank account. I'm going to put all of my money, all my lodgements are going to go onto the left hand side. So my 3 bank lodgements, 53,000, 91,000, and the inheritance 30,000 will go on the left. The loan will also go on the left. That is 240. On the right hand side, I'm going to put in all of my bank payments. Okay, so all of my bank payments are the 43,000, the 66.5, the insurance at 3,900, college fees 5,000, office equipment 25,000. Where's the rest of it? Jesus, office equipment. The charitable donation of 5,000, light and heat at 2,600, and the loan interest paid of 2,800. You have to then remember to put in the new building you bought. So what did you use the loan for? Well, you bought a building, and the building cost 190,000. And then finally, the last thing you could put in is if there was any investment fund being created and money being transferred out for an investment. It's not in this question, but that would go into that situation or into that scenario. So the left hand side, let's see what it adds up to. The left hand side adds up to 414,000. The right hand side adds up to 343,800. So to find the balance, we take the left hand side and take away the right hand side, and you get 70,200. So now both sides add up to 414. So that's your balance there. Okay. So your balance is that your bank balance is 70,200. So just a reminder what we did. All bank lodgements on the left, the loan on the left, all bank payments on the right, and what you use the loan for on the right. And I said if there was an investment that would also go on the right hand side. The other thing you could have, if there was drawings by check, they would go on the right hand side as well. I've only ever seen it once before, but it has been in another question. So the 70,200 is your bank figure. So I think that's it. We can start adding up. So our expenses are 65,025. Take them away. And then you get a net profit of 35,645. Of course, that'll go in over here. Hopefully I've got the rest of this right. Delivery there was no drawings on your vehicles. There was no drawings on equipment, so that should be got the 35 there. There was none on buildings. That's 440. There was no depreciation either. And the office equipment 25,000. There was no drawings or depreciation on those. So we'll add up our 4 fixed assets. Don't forget to include your goodwill. They add up to 533. Now add up your current assets. Again, I hope I have them all in. 134,375. Your current liabilities are 49,925. Take them away from each other, and you get a working capital of that. And add them on. 617,450. I hope this bloody thing balances. So add these 3 numbers together and take away your drawings. Remember, you have to take away your drawings. Then add on your loan. And hopefully it adds up to 617,450. It does. Happy days, balances. So that's our incomplete record that we worked on today. I said that thing was new. The other thing from the 2018 short question, the 60 marker I was speaking about, was the rent and the rent prepaid, and just being aware of that. Okay. Anyway, I hope you found that useful, lads. I'll see you tomorrow. We will look at we'll do another suspense one tomorrow maybe, and again I'll finish it tomorrow night for you by video. But see you all then.